In the meantime, Tesla's stock has surged back and is currently up for the year. Has it merited a return to the Mag 7? For today's Tech Check, our beloved Diros is investigating that. Good morning, D. Hi, Carl. Good morning. Therefore, when it reports later this month, the stakes for its profitability are suddenly higher. Now up 80% from their 52-week low, shares are up for the year. However, the basics haven't altered all that much. Although last week's Q2 deliveries were obviously higher than anticipated, Tesla continues to face more competition than ever before, which is hurting its growth and profitability and making it appear as though it doesn't belong in this club of megacaps. It is the only one of the 7 that is predicted to have a decline in revenue growth this quarter, and earnings growth is much worse, predicted to drop by 34%. According to experts, Tesla's stock price may reach $400, considerably sooner than most people think. We'll examine the most recent developments at Tesla today, such as their groundbreaking developments in autonomous driving, electric vehicle technology, and their calculated market strategies that are changing the landscape of the sector. We'll examine the main drivers of Tesla's stock price growth, such as the company's strong sales numbers and innovations in software and energy solutions. We'll also talk about how outside variables like market developments and industry rules could affect Tesla's course. If you think this video is smart, please make sure you like it. For in-depth analysis, sign up for Tesla Stock News. Additionally, to ensure you never miss any of our updates, remember to click the notification bell. Let's now explore the reasons why Tesla's ascent to $400 might be occurring sooner than we currently believe. Not only is Tesla's stock rising, but its remarkable delivery figures are also causing it to make headlines once more. But what's really happening may seem more important than this increase. Many may be surprised to see that Tesla's stock is predicted to rise from $250 to $400 far more quickly than projected. Viewers, time is not on our side. Let's now examine why this is anticipated. This forecast is based on fundamentals rather than technical charts or trade trends. Sales, profitability, and total income have all virtually tripled for Tesla in the past 3 years. The stock is still 50% behind its peak, despite the fact that all important metrics showed notable increase. The stock has increased 15% over the past 3 years in spite of these declines. This creates a glaring discrepancy between stock price and performance for a corporation whose operations have nearly tripled. However, this gap will eventually close. A successful business's greatest ally, time, will make sure of that. Don't worry if you have to leave now. There's a reward in store if you decide to stay. Along with my profitable stock selections from 2023, which produced an average return of 160% per stock, I'll be releasing a checklist of how some experts forecasted Tesla's recovery among general pessimism. There is a ton of insightful analysis to come. It was predicted only 3 weeks ago that Tesla's price would not stay below $100 for very long. In a month, those who watched that video probably witnessed a 30% gain. The key question now is whether the stock, which is now trading at $250, will reach $400. As someone who is interested in fundamentals rather than just trade, this is my justification. Experts believe that Tesla's forays into autonomous technology, energy solutions, and humanoid robotics, areas that have the potential to revolutionize industry norms, have a lot of promise. Despite a 160% gain in revenue and a 1,000% increase in net income over the last 3 years, Tesla's stock is still below its peak. The year-to-date figure is down 7%, despite a 26% increase in the last 5 days. This disparity reveals an undervalued stock in relation to its market potential and financial accomplishments. For astute investors, Tesla's current stock situation offers a definite advantage. Tesla's revenue has nearly tripled in the last 3 years, rising from $35 billion to an astounding $95 billion. The stock price has only slightly increased by 15% in spite of this impressive expansion. This results in a discernible discrepancy, which has been emphasized continuously since 2020. 3 weeks ago, it was reaffirmed that Tesla's stock price performance and business growth are projected to close the gap in the near future. Regarding Tesla's particular breakthroughs, the Optimus robots and the fully autonomous feature are promising areas. Considering their promise for the future and Tesla's current valuation, these innovations are being provided at what appears to be a great price. It's crucial to understand that, despite its $700 billion market valuation, Tesla is comparatively little in light of FSD and Optimus's revolutionary potential. While Optimus has the potential to transform sectors on a scale that may surpass that of artificial intelligence, FSD seeks to monopolize licensing agreements throughout the car industry with a profitable 80% profit margin. Neither genius nor prophetic vision are credited with being able to recognize such excellent prospects. Rather, it involves using a methodical strategy to find businesses with significant room for expansion. At the start of 2023, choosing businesses that would succeed in the upcoming years became a strategic priority. Industry titans such as Google, Tesla, Palantir, CrowdStrike, Bunge, Sophie, Arista Networks, Supermicrocomputer, and NVIDIA were among the 9 carefully selected equities that were covered during the year. These businesses were chosen on the basis of their strong foundations, capacity for innovation, and positioning in the market. The outcomes are self-evident. Over the last 18 months, these stocks have increased by an amazing average of 116%. Supermicrocomputer has distinguished itself among them with rapid expansion, surpassing even the most optimistic forecasts. Furthermore, the suggested S&P 500 investment has produced an impressive 44% gain, greatly exceeding the average market rate. This achievement highlights the importance of a well-thought-out and diversified investing plan, demonstrating that even in a volatile market, significant returns are possible with the correct approach. This history of spotting profitable stocks emphasizes how crucial careful research and well-thought-out investment choices are. Stock market success can be attained by concentrating on businesses with promising innovations and robust growth indicators. Wall Street's closing bell is ringing. Over time, the market is now dominating. Jared Blicker joins us to provide you with an update on the events of today's session. First, let's look at where the major averages ended the day, which was not too far from where we checked them an hour ago. The Dow has dropped roughly 53 points, or 0.1% in this instance. The S&P 500 has seen very little upward movement, but any advance today would result in another record closing for the index. Additionally, it marks the 36th record closing of the year. Being the world's best trader or investor, possessing a crystal ball, or following your instincts are not the reasons for this excellent predictions. Instead, it's the use of a straightforward, efficient system. Potential investments are assessed by this approach using a number of important criteria. Growing revenues are a crucial sign of financial health that both Tesla and Palantir exhibit. This increasing tendency is significant since it indicates that the businesses are growing and gaining market share. Both businesses have growing cash reserves in addition to revenue growth, which shows sound financial management and capacity to finance future growth without unduly depending on outside funding. Another essential component of these businesses' success is their leadership. Both Palantir, under the direction of founder Alex Karp, and Tesla, under the leadership of Elon Musk, who is regarded as a quasi-founder, gain from having visionary executives who are fervently committed to the future of their businesses. The interests of management and shareholders are frequently strongly aligned in these founder-led businesses. The foundation of stability and predictability in business is recurring revenue streams. Palantir's software solutions and Tesla's full self-driving capacity provide a sizable stream of consistent revenue, which can greatly even out financial performance over fiscal periods and lower volatility. Last but not least, Palantir's pricing power is evident in its capacity to demand large payments from its top clients, each of whom contributes $50 million a year. This capacity demonstrates a strong competitive position in the market in addition to highlighting the worth and necessity of Palantir's solutions. Additionally, the system honors founder-led leadership, acknowledging the distinct vision and dedication that entrepreneurs bring.